This is Nightly Business Report with Bill Griffith and Sue Herrera.
Hiring boom, 300,000 jobs created, 100 straight months of gains, extending what has become the longest job creation streak in modern U.S. history.
Fueling gains, Exxon and Chevron both posted some of their biggest annual profits in years, even as oil prices swooned.
From farm to Fido, a fast-growing startup is bringing healthy food to your four-legged friend. It's tonight's Bright Idea. Those stories and much more tonight on Nightly Business Report for Friday, February 1st.
And we do bid you a good evening, everybody, and welcome. The American jobs engine clearly is still firing on all cylinders. The latest monthly report from the government this morning showed non-farm payrolls were up 304,000 in January, the most in nearly a year, and that blew away expectations of 170,000. The unemployment rate did rise slightly to 4%, but that is still an historically low number. Average hourly earnings were higher. They have now risen more than 3% of the past year, and that is something that the Fed watches very carefully. But what's interesting is this report shows that most private sector businesses shrugged off any economic uncertainty that might have been created by the partial government shutdown. They just kept hiring. Ilan Mui reports tonight from Washington.
The U.S. economy shaking off the shutdown, delivering big job gains in January. President Trump celebrated the strong numbers at the White House today, calling them a reflection of his winning policies.
We added 304,000 jobs, which was a shocker to a lot of people. It wasn't a shocker to me.
Hiring was strong almost across the board. Leisure and hospitality led the way with 74,000 jobs. Construction was up by 52,000 jobs, and healthcare grew by 42,000 jobs.
I think what this data shows is the private sector has remained robust, even as the government is Twitter-pated with the shutdown.
In fact, the unemployment rate did tick up from 3.9% in December to 4% in January. How could that happen? It's because of the way the Labor Department collected information about the shutdown. Furloughed federal workers were counted as employed in the government's survey of businesses, so there was no impact on the number of jobs created last month. But when the Labor Department surveyed individual households, furloughed workers were counted as on temporary layoff, 175,000 of them, pushing the unemployment rate up.
Ever want to have to deal with the shutdown again, because it's on your mind consistently. There was no free vacation.
Another 500,000 people were classified as working part-time for economic reasons last month, perhaps even taking jobs at places like Uber and Lyft. That's evidence that the shutdown did have an effect on private contractors and other businesses that rely on the federal government.
I hope Congress will figure out a way for the contractors to get their back pay as well, because we work along with the federals just as hard as they do.
One word of caution. The Labor Department says it's really difficult to capture the full effect of a shutdown, and even the headline numbers are subject to change. December's blockbuster job report of 312,000 jobs, that was revised downward to just 222,000 jobs, a lot closer to what investors had expected all along. For Nightly Business Report, I'm Ilan Mui in Washington.
Ethan Harris joins us now for more analysis on the jobs report, and he is head of global economics at Bank of America Merrill Lynch. Welcome, Ethan. Nice to have you here.
Thank you.
When you look at this report, what's not to like? Even the participation rate was good.
Yeah, this was a check all the boxes report. The one factoid you guys didn't mention, payroll jobs have grown an average of 240,000 over the last 3 months. That's about double the normal pace of job growth in a trend-like economy. So this was a very, very robust report.
Wage growth, 3% year over year. That's above what the Fed had been looking for, but yet they're willing to be patient in raising rates down the road. Is there a disconnect there at all?
No, I don't think so. I think that after 2 years of a hot labor market, we're now getting the kind of wage gains you would expect, but it hasn't translated into price inflation. And I think the Fed is in a pretty patient mood there. They want to see first evidence that this recent stock market shock isn't really hurting the economy, and they're going to wait a while just to figure that out. They're not focused on inflation right now because the price inflation numbers have been so weak. And so we're in a pretty good spot right now. Low inflation, strong growth. You know, you can't do much better than that.
Was there anything in the report that you would have liked to see a little stronger, or anything that you think missed the mark?
No, I think your report was right. I mean, there were a lot of distortions in there due to the shutdown. And one thing I would add, you know, on a positive note here is, last year we had a very strong economy, but companies had trouble filling jobs, and so there are a lot of very high job openings, record level. And one reason the job market has so much momentum is, even with slower growth, they need to hire. And so this job market is going to remain pretty strong even as the economy continues to weaken going forward. So I guess I didn't give you a good negative story there. I think it's, there's a lot of positive here.
Hey, if there's nothing negative about it, then that's the story. But what about this slowing economy? Isn't it true, though, that the job growth is usually a late cycle grower? You know, that usually employers don't hire anybody anticipating growth. They're waiting to see the growth before they hire. So is it possible that this job growth continues even as the economy slows?
Well, again, I think that there's so much trouble finding workers in the past year that, and all these job openings developed, that companies are going to keep hiring even as the general economy slows down. I think the labor market is going to be exaggerating the strength of the economy. We are in a process of seeing some slowing, particularly in the corporate side of the economy. We need to see a de-escalation of all these policy shocks if we're going to avoid a hard landing for U.S. growth. But right now, the story here is that the labor market is a huge positive, great for the consumer, really a good offset, at least for a while, for some of the other stuff going on right now.
All right, Ethan Harris with Bank of America Merrill Lynch, thank you so much.
Thank you.
And on Wall Street, it was a mixed finish for the stock market today on this first day of February. Earnings, for the most part, were positive, and that jobs report certainly reassured investors about the health of the labor market. The Dow finished the session up 64 points. We're still above 25,000. The NASDAQ fell 17, in part because of Amazon's quarterly results that we told you about last night, and the S&P added 2. For the week, both the Dow and the NASDAQ posted their 6th straight weeks of gains.
Dow component Merck reported better than expected earnings and revenue, driven by sales of its cancer drug Keytruda. Sales of Keytruda alone were up more than 60% compared to a year ago, and the CEO is confident that annual financial targets can be met, adding that the company has one of the broadest and most promising pipelines in a decade, and that sent the stock up more than 2.5%.
Exxon and Chevron, of course, the two of the world's biggest oil companies, they wowed Wall Street today with their strong quarterly earnings. Shares of both climbed more than 3% as a result. And as Brian Sullivan reports now, the gains were powered by the Permian.
Energy stocks have been the best performing part of the stock market this year, and quarterly reports from the country's two biggest oil and gas companies did not disappoint. Both ExxonMobil and Chevron released results on Friday, and investors liked what they heard. First up, ExxonMobil. Quarterly earnings up 73%. Their earnings per share, $1.41. The Wall Street consensus, just $1.08. Now, revenues were a little light of some of the more aggressive estimates, but the market was still pleased. The big win was on the downstream side. That is oil talk for refining and selling the finished product. Downstream revenues came in at $2.73 billion, far ahead of estimates. Also, a tax rate of 32% in the quarter was much lower than the 40% average for the first 3 quarters of last year. Exxon CEO Darren Woods on CNBC talking about how there is some expansion still going on, but the key to their business remains keeping costs down.
As we were coming into 2019, we anticipated some economic slowdown. Still expansionary, but some slowdown there. Frankly, we don't run the business or try to build it on a projected demand or projected oil price.
Chevron also out with its numbers on a Friday. Their EPS $1.95, the consensus estimate $1.87. Production and revenues both beating estimates once again. Chevron posted growth in the Permian Basin of Texas as well. It is one of the biggest players in that hot oil area. Chevron also announced the new $25 billion stock buyback program with no set term limits. Exxon and Chevron shares both rising today, and that move helping the energy sector and the overall market. The biggest ETF in the energy space, the XLE, higher, and it has surged lately. In fact, if you were smart or maybe lucky enough to buy on the lows of December 26, you've already made 20% on your investment. Exxon and Chevron generally benefit from higher oil prices, so the one thing to keep in mind going forward is where prices move in the next couple of months. Oil averaged about $60 a barrel last quarter as it fell from 75 to 45. So even while oil had a huge gain in January, it is still below the average price of last quarter. The bottom line, things are pretty good for the two biggest oil and gas companies, but if crude falls again, things could look different this quarter. For Nightly Business Report, I'm Brian Sullivan.
It is time to take a look at some of today's upgrades and downgrades. Dow Component United Technologies was added to the conviction buy list at Goldman Sachs. The analyst cites strength in the defense sector as well as other positive factors. The price target is 153. The stock rose a fraction to 118.98. Fellow Dow component Dow DuPont was downgraded to neutral from overweight at J.P. Morgan. The analyst cites weaker results from its material sciences business. The price target there is 53. The shares fell slightly to 53.47. And PayPal was downgraded to neutral from overweight at Atlantic Securities. The analyst cites that stock's relative valuation. The price target is $99. The stock, however, rose more than 1% to $90.01.
Still ahead, why our market monitor says it is time to buy stocks that have exposure to the emerging markets.
As we reported, employment growth in January was very strong, and the healthcare industry is creating a lot of those jobs. But it's not easy to fill all of those positions, especially when it comes to emergency workers. Kate Rogers is in Bangor, Maine.
On any given day, Eric Mailman could transport a baby requiring intensive care from one hospital to another, or help an elderly patient in cardiac arrest. Mailman could answer between 4 and 17 calls a day on shifts that can stretch well beyond 24 hours. The only guarantee is his days and nights will be busy and unpredictable.
If it's a slow day, then you're doing well. But those days where the demand is high, you have an increased call volume that, everyone decides to be sick all at one time, then you're really struggling.
Mailman works at Northern Light Health, where 170 people are employed in emergency medical services. But the rural Maine system is in need of about 10% more EMS staffers, and hiring is proving to be increasingly challenging in a tight labor market where fewer people are entering the profession.
Unemployment is low. I mean, that's a big part of it. This is a job that people used to get into. One of the more common pathways was through volunteerism, and volunteerism is way down from what it used to be.
The need for EMS talent stretches far beyond Maine. In fact, some 37,000 EMT and paramedic jobs will be added through the year 2026, according to BLS. Demand for EMS workers comes at a time when the healthcare sector is adding a myriad of jobs. Some 42,000 were added in January as the population continues to age and seek care, and workers age out of their roles in the industry. A strong job market is also having another effect.
More people with health benefits, more people with insurance increases demand for health care and therefore health jobs.
One thing is for sure, as more people seek care, workers like Mailman will be ready to answer the call.
You get to step into the chaos of the worst day of somebody's life and bring calm, bring peace, and have the ability to step in and help somebody on their worst day. That to me is priceless.
For Nightly Business Report, I'm Kate Rogers in Bangor, Maine.
And to read more about the need for EMTs and paramedics, you can always head to our website, nbr.com.
Papa John's Pizza may no longer be up for sale. That's where we begin tonight's market focus. According to Reuters, the company is now looking for an investor instead of an outright buyer for the company. Buyout offers apparently from private equity firms did not come in high enough. And any deal will be complicated by that battle for control of the company with its founder, John Schnatter, who owns about 30%. Shares fell about 9% on all this news today to $38.51. Honeywell today forecast strong full-year earnings and said that it's likely to post its highest profit margin in more than 2 decades. The outlook is a result of the industrial manufacturer's sharpened focus on its profitable businesses. It's also benefiting from the strong aviation sector, which is increasing demand for aircraft parts. Shares rose a fraction today to 144.71. And Cigna is shrugging off the government's proposal to eliminate rebates to pharmacy benefit managers that they receive from drug makers. That's a plan we told you about last night. Cigna's CEO said today that such a plan would have a minimal impact on his company's earnings. Cigna also reported better than expected profits, but did provide what analysts described as a conservative forecast for this whole year. The stock fell more than 2.5% today to 194.06.
Sony reported its highest ever quarterly profit, driven largely by its music business. But the company did point to shrinking earnings at its game division. That is leading to concerns over Sony's next leg of growth. And the stock fell nearly 8% to 46.15. Illinois Tool Works cut its sales growth forecast after missing revenue estimates in its most recent quarter. The company says it is cautious about upcoming semiconductor-related demand. It also plans to discontinue its quarterly sales and earnings guidance, given the company's focus on long-term performance. The stock fell 2% to 134.43.
Now to our market monitor, who favors companies that he says will benefit from strong emerging market growth. Joining us tonight is Alan Bond. He's co-portfolio manager of the Jensen Quality Growth Fund. Alan, good to see you again. Welcome back.
Hi.
I think you would agree that anybody who wants to invest in the emerging markets has had to be patient, waiting for growth in that area of the world. You start tonight with United Technologies, the diversified industrial manufacturer. Why that company, and how would it benefit when emerging markets do start to grow again?
Yeah, so United Technologies is a global industrial conglomerate with a wide range of capital-intensive businesses that range from aircraft parts to elevators and building construction materials. And the emerging market story with United Technologies is really helping those countries build out their infrastructure with things like elevators and escalators and things of that nature. We think United Technologies is a good story right now. The stock's been a little bit weak due to uncertainty around the company's announcement that it's planning on breaking up. But the business itself is doing very well, and we think that's important, and we think this pullback is a good opportunity for long-term investors.
Microsoft is also your pick. Why? How does it benefit?
Sure. So Microsoft is obviously one of the world's largest enterprise software companies with a host of products that are ubiquitous here in the U.S. and clearly around the world. We think that's a real advantage for Microsoft. And it's obviously a mature business, but they have kind of found the next leg to their growth story, which is their cloud software products. And we think they're very well positioned to help their existing corporate customers transition to the cloud, and specifically those that may not want to use Amazon because they view Amazon as a competitor. And we think that cloud revenue can propel the company's business and share price as we look forward here.
And the third one is Pepsi. The stock essentially has been sideways for the last few years. Why this one necessarily over, say, Coke, for example?
Yes, Pepsi is a very well-known business with brands that resonate with consumers around the world. And we think that brand equity is a very powerful competitive advantage for Pepsi. Relative to Coke, Pepsi is just a much more diversified play in terms of their product portfolio. Pepsi has been a bit weak. We think that recently that may just be due to the broader backup in interest rates because the business itself is doing well. We're seeing signs of acceleration in their top line, in their pricing power. And so we think this pullback may be a good opportunity to own shares in what we consider a very high-quality business.
Very quickly, of the emerging markets, which one do you favor the most?
Well, that's good. I think it kind of depends on what company you want to invest in. And for us, a lot of our emerging markets exposure is through healthcare stocks, where emerging markets are growing their healthcare infrastructure as they mature. And we're looking for companies that can help them do that. And it's a really good growth story for those companies.
So it's a sector story, not necessarily a geographic story. Alan Bond with Jensen Quality Growth Fund. Good to see you again. Thanks for joining us tonight.
Thank you.
Elsewhere, it wasn't easy to find a story about the Super Bowl and global trade, but Jane Wells did it. And at the center of it all is the avocado industry and a glut of guacamole.
Guacamole, an increasingly essential part of Super Bowl Sunday. But while most of the avocados grown in America come from California, most of the avocados Americans eat come from Mexico. 80%. Such a big business that Avocados from Mexico made another Super Bowl ad.
Welcome to the dog show where humans compete for the ultimate prize, avocados from Mexico.
Imports from south of the border are up 20% from a year ago, and that's creating a guac glut. Prices are falling. At a Los Angeles supermarket owned by Kroger this week, avocados were selling 2 for $1. That hurts American growers, which have lower profit margins due to costs like labor.
In the last 2 weeks, Mexico shipped about 140 million pounds of avocados, which is roughly the equivalent of the whole California crop that they've shipped in 2 weeks.
And in the crazy world of global trade, as more avocados come north into the United States from Mexico, U.S. farmers want the Trump administration to open up the market for American avocados across the ocean in China.
Currently, California avocados do not have market access to China.
Ken Melvin of the California Avocado Commission says China wants U.S. avocados if issues like pest control can be worked out, which he thinks is doable.
We've been working with the United States Department of Agriculture to get access into China since 2005, and suffice it to say that effort has been stalled tremendously, and we're at a point now where we are just asking for access to other markets so that we can compete with the producers that are coming into the U.S. also.
A local congresswoman has written the administration to make avocados part of the China trade talks. California-based Calavo growers reported a surprising fourth quarter loss as avocado prices fell. But if the Chinese market opens up, perhaps investors will buy the dip. For Nightly Business Report, Jane Wells, Somis, California.
Oh, Jane. Coming up, fresh food delivered to your dog. Meet the entrepreneurs who are doing it and creating jobs at the same time. It's this month's Bright Idea. Just as we're all paying more attention to the food that we eat, pet owners are keeping a closer eye on the foods that they're buying for their pets. But just because a marketer says a food is healthy doesn't mean it is. And that is why two entrepreneurs, both dog lovers from Brooklyn, New York, got the bright idea to start a company aiming specifically to keep your dog healthier. For 2 years, Jada suffered with stomach issues. Her owner, Brett Podolsky, tried all kinds of foods, from kibbles to cans, and freeze-dried to raw. But he was constantly running home to check on Jada.
I felt so bad for her. It was like a heartbreaking time period.
In 2014, a vet suggested home cooking. Human food, beef and vegetables. Jonathan Regev, that's his dog, Buddy, roomed with Podolsky at the time.
I was like, what are you doing? He's like, I'm cooking for Jada. And I thought he was insane. I'd never seen anybody cooking for their dog before.
It was like magic. All of her symptoms disappeared.
Unable to find a product on the market using the USDA's standards for human food, Podolsky and Regev kept cooking and began researching. They found stories linking cancers in pets to food. Companies focused on cost efficiency and products meeting only bare minimum standards.
Nothing commercial was going to be fed to my dog ever again.
Dogs need what's known as a complete and balanced diet, with more vitamins and nutrients than they get from human food alone. So Podolsky and Regev created a mix and tested samples at a lab until they got the farmer's dog. Launching in late summer 2014, it's frozen and shipped to arrive days after it's cooked.
So this one's turkey, broccoli, parsnips, carrots, and then the vitamin and mineral mix.
It's human grade with no preservatives, and yes, they've both eaten it.
Somebody was like, when was the last time you ate it? And I was feeding Jada, and I was just like, just take a bite.
We had a Thanksgiving dinner with the team, and our head of engineering put the turkey recipe inside of these empanadas and didn't tell anybody.
Dr. Carly Fox at the Animal Medical Center in New York says she usually recommends commercially available food as long as it's complete and balanced. So is freshly made human food better? She says maybe.
It is beneficial for a pet to eat human grade food if it's something that is
available to you and it's something that you're able to provide to your pet, I think it's something that you should absolutely discuss with your veterinarian.
Costs depend on the size of a dog, averaging about $29 a week. The farmer's dog hit the market just as American spending on pet food began trending up, almost $30 billion in 2018, up more than 30% in 4 years. For 2 years, the farmer's dog rented startup spaces, cooking alongside startups making human food products. Since then, Podolsky and Regev found a commercial manufacturer using USDA human food standards. And the pair say they're now shipping more than 1 million meals a month.
When people think about dog food and dog food that they want to invest in to keep their dog healthier, that food will look like food and it won't be a brown ball.
This is not just a sick dog thing. This is an every dog thing. We wanted a company whose entire focus was making dogs healthy.
And their customers are buying into the idea that preservatives aren't great for humans, and so they probably aren't great for animals either.
Works for me.
Me
both
too.
of us, yes. Before we go, a final look at the day on Wall Street. It's February already. The Dow was up 64 points today. We're back above 25,000. The Nasdaq fell 17, thanks in part to Amazon, and the S&P was up 2. For the week, everybody was higher. The Dow and the Nasdaq posting 6 straight weeks of gains now.
And that'll do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for watching.
I'm Bill Griffith as well. Have a great weekend. Enjoy the Super Bowl.
Yes.
See you on Monday.